In this video, we're going to talk about the concept of account rent on Solana. So basically, the term rent refers to the amount of LAN ports you have to allocate to an account for storing some data on that account. Now, the LAN ports that have been allocated to an account can be fully recovered when that account is closed, so you can think of it more like a deposit. The reason the term is called rent is because previously there was a mechanism where some amount of LAN ports would regularly be deducted from the account, but that's no longer the case. So you can just think of the term rent as a deposit you have to allocate to store some data on chain on an account. Now, the minimum amount of bytes for the base account type is 128 bytes and requires 890,000 LAN ports. And when I say base account type, what I mean is the account type here, where this base type required for every account on Solana, where this data field is at 0 bytes, requires 128 bytes and this many LAN ports. Now, the way to think about how rent LAN port is calculated is effectively just the number of bytes you need to allocate times some constant. So now let's talk about where this constant comes from. If we look at rent here, the rent type, there are 3 constants: the LAN ports per byte year, the exemption threshold, which is how many multiples of this value must be held, and then some burn percentage, which you don't have to worry about because rent is no longer collected. So the default values are as follows. We have the default LAN port per byte year, so this constant here, multiplied by the default exemption threshold, which is 2, and then the default burn percentage, which is 50. So effectively, the amount of LAN ports you need for an account is equal to the number of bytes you need to allocate times this value times this value. So for the base account type, where the amount is 128, your rent is calculated as taking the minimum balance function, passing in the number of extra bytes you need to allocate, and that would take the base account storage overhead plus the number you pass in here times the LAN port per byte year constant times the exemption threshold. As an example, we can take a look at this code here, where we establish a connection to the local test validator, generate a brand new key pair, calculate the minimum LAN ports required by calling get minimum balance for rent exemption, which makes an RPC request to make the calculation for the minimum rent for 0 bytes of extra data. And then we call request airdrop on this new key pair, which is just a request to transfer some SOL to this address here for the minimum LAN ports. And then we will try to get the account. If we were to run this, we would see that we get the following output, where we have this address here, our minimum LAN port calculation, a transaction that was sent to transfer SOL to this address, which creates an address with the following on-chain data that stores the following LAN port balance, which matches the amount we requested. So this means after the airdrop request, there is an account on-chain at this address storing this data here. If we, for example, subtracted 1 from the minimum LAN port amount to request less than the minimum required for an account and try to run this again, we would see an error. So this is a new key pair that was generated. The minimum amount is still this much, but we're requesting 1 less than the minimum, where we now get an error with the transaction we tried to send. The error says insufficient funds for rent for our account here. And if we try to fetch that account, we get account not found at this address. Because this transaction failed, this account was never created at this address. So at a high level, that is a basic summary of the concept of account rent. It's just LAN ports we have to allocate to an account to store data on chain. And you can basically think of it as some amount of LAN ports equals to the number of bytes we need to allocate to an account times some fixed constant.